rough news for the real estate market. Why don't we just start out our week talking about that? There might be a silver lining, so we'll get into it, but let's go. Thanks for joining me, you guys. I'm Caitlin McKegg. I'm a real estate broker here in Phoenix. If you're new, I'm always reporting what's going on in Phoenix real estate and the economy and all of those things that we like to track. It's not always negative, but this week we have quite a few negative articles. So many young adults have given up on the American dream. This isn't really new news, but it is pretty sad to see that many Gen Zers and millennials don't feel like they can afford a home. With inflation, rising debt, higher costs of borrowing, it's been really hard for entry-level buyers to purchase in a lot of areas, but Phoenix is really one of those too. This says nearly half of millennials and a third of Gen Zers cited the inability to save for a down payment as an obstacle. 21% of Gen Zers and 16% of millennials said they need to pay off student loan debt before they'd be able to purchase a home. The average payment took up 36.5% of the median household income in July, which is a record high and up from 24.3% in 2021. That's according to Black Knight. Now, that is on a national scale and not specific to Phoenix, but I will tell you that affordability in Phoenix is not looking much better than that. I don't have the latest data, but we are certainly not in any better position than the national news. So let's look at another sad headline. Disturbing trend for real estate investors. Homes sold at a loss. Numbers not seen since 2016. So if you saw my video on Friday, I was talking about how investors have been exiting the market here in Phoenix. And that's kind of what this article is touching on as well. Of course, looking from a national standpoint, and they're reporting some numbers that came in from February sales, but they are talking about how 14.5% of the homes sold, investors experienced losses on those. The highest rate since 2016 and a far cry from the record monthly low of 2.8% in May of 2022. So, of course, they're going to call out the hardest hit markets, and Phoenix leads the pack. So if you want to see what the numbers look like as far as investors in our market today versus what they were last year at this time or even earlier this year, check out that video that I posted on Friday that digs a little bit deeper into investor purchases. So this is happening everywhere across the country, which isn't a huge surprise because you really have to know what you're doing if you want to flip a house. You really need to get a good deal. You need to be able to have some great contractors in your back pocket to do work for a good price and do good work so that when you go to sell it, you can actually make a profit. And it's much harder to do in this market than it was when we were seeing appreciation basically on a daily basis over the last few years. So next, let's move on to our third sad headline. Mortgage demand stalls at a level not seen since 1996. This is talking about how where we're at with rates increased from 7.27 to 7.27 from 7.21%. Demand for refinances dropped. Applications rose 1% week to week, but they're down 27% lower than the same week a year ago. And of course, you know, you're going to have some volatility, but last year at this time, mortgage applications were really low because we were just coming off the summer where we saw an increase in supply. Rates started going up. A lot of people were not interested in purchasing and they were sitting on the sidelines. So to be lower than we were last year is a really low number. So is there any silver lining in all of this? We have people that say they can't afford homes. We have investors losing money. We're seeing mortgage rates that are stalling the buyer demand. And then last week, we got the CPI report for inflation that actually came in hotter than expected. That is not what we needed to see. Now, it was 0.3%. It wasn't anything significant in terms of expectations, but it was hotter than expected. But it seems like it didn't move markets too significantly. So this week we have the Fed meeting, and why that's important is because that will signal to markets what their plan is for the rest of the year, and those kinds of changes can affect mortgage rates. This is anticipating that the Fed's going to pause their rate hikes. Even though we got a higher inflation read, they are anticipating that rate hikes will be paused. And I've read somewhere that there's a 99% chance that they are going to pause the hikes for now, or at least for September. So it seems very likely that this is what will happen on Wednesday. So we'll need to watch out for that. But if any curveballs come, definitely want to keep our ears out, because that can affect mortgage rates. So if you're in the market right now trying to lock in your rate, just keep in touch with your lender, because they'll be able to tell you if anything crazy comes out of the woodwork that would affect rates this week. But it seems pretty likely that this is going to be the outcome of the meeting. And next week, I'll be able to share more of what happens on Wednesday. So what's going on in Phoenix? This is kind of an overview of everything going on economically and on a national scale for real estate. But is Phoenix doing any better than all of these negative articles? Not much. Not much better. Got a few things to look at. One in particular, we are seeing our supply start to increase. And what I've talked about on this channel a lot is that although our demand has gotten so low, we've always had such low supply that it's kept our prices stable. Even last year when supply was increasing, we still had such little supply compared to the demand. And now with this low demand, we are starting to see supply tick up. So I'm going to show you more of those numbers specifically. But first, if any of this is of value to you, make sure you consider subscribing to join our community. We're going to talk about the Crawford Market Index. If you're new here, this is what I talk about every week. I'm a subscriber to the Crawford Report, and they have this index that shows supply and demand in our market, and that helps us understand where prices are heading. The market index is 150.5, and anything over 110 is considered a seller's market. So this may seem strong. However, thinking back to 2022 and 2021, we saw this number in the 400s. It got really high, and it may have gotten close to 500 as I'm trying to think back to those crazy times. So this is considered a seller's market, but really a weak seller's market. And this has been decreasing because we've been seeing our demand go down. So demand is at 75.8, and they consider 100 being that kind of normal area. So demand is down 25% below normal. Supply, same thing, with 100 being normal, it's down to about 50%. So we still have a situation where supply is lower than demand, but demand keeps falling and supply is starting to rise a little bit. And I'll show you what those numbers look like in a second. But either way, we're in this seller's market, albeit a weak one in Phoenix, and it depends on what city that you're in, because this is looking at Phoenix Metro as a whole. So when we dig into these specific cities, you can see how each one is performing differently. Remember, 110 being a seller's market, Chandler's at 246, but Chandler has seen a 20% decrease month over month in their CMI, because last month they were at 309. So Chandler's been losing a lot of ground, even though it's leading the pack here. And what we're seeing is overall, when you take the average of all of these cities, the change month over month is more this week than it was last week. So we're seeing some acceleration in the deterioration for sellers. And I say this every week, but if you're new, the way to read these arrows, red is bad for sellers, green is good for sellers. It's all kind of looked at from that seller perspective. So you can see a lot of red on there, and that means that sellers have lost ground in all of those cities. But again, just take a look at these numbers, because pretty much everything is over 110 from Buckeye and above. Anything between 110 and 90 is considered a balanced market. So you've got Goodyear, Maricopa, and Queen Creek in a balanced market, and then anything below 90 is a buyer's market. So we still have majority sellers markets, but we're seeing this trend downwards. and away from a seller's market for many of these cities. This week we saw that change month over month to be negative 5.9%, so almost a 6% change. And last week, what I had said was the change month over month was a negative 3.9%. So again, just showing that acceleration in how things are deteriorating for sellers overall, and in some cities more than others. Chandler, let's see, we also have Gilbert saw a pretty big change. Cave Creek saw a big change, but for an advantage for sellers, that went up their CMI from 149 to 175. And then we've got Goodyear, who's also had about 10% change. So depending on where you're at in the valley, whether you're a buyer or a seller, this might help you kind of gauge how you want to behave when you're writing your contract, or if you are, listing your home, and how competitive you want to be on that price. So let's look at this supply situation. We're starting to see an uptick in supply, and it doesn't look dramatic here, but you can certainly see this trend going upwards over the last few weeks. And what the Crawford report has been saying about this is that over the last 2 weeks, we've actually seen the supply rise 6.1% in 2 weeks. That's a pretty big change, in my opinion. From September 2nd to September 16th, we saw a change of 6.1%. New listings are still fairly scarce, but they are coming on the market at a pace faster than what our demand is absorbing. And that's kind of the bottom line. That's why we're starting to see this line increase. The Crawford report is predicting that we're going to continue to see this until about mid-November. And then we see that usual seasonal decline in active listings. So we'll see if that continues. But right now, this is definitely something to watch, because this is what could change the market. It's something I've always said. If supply starts to really increase quickly and we don't have that demand to absorb it, that's when you will start to see prices come down. So keep an eye on that. So hopefully this wasn't too depressing of an update for you if you're a seller. If you're a buyer, don't get too excited. I don't see any definite trends yet, but certainly something to watch, and especially keep in touch with your lender, keep an ear out for the news to find out what's going on with mortgage rates, because those are certainly affecting the demand, especially here in Phoenix. If you guys want to know what your instant home value could be, or if you want to search my MLS for homes for sale, check the description below. I have some links where you can do that, or just set up a discovery call if you're not sure where to start with either buying, selling, or investing. So thanks for joining me, you guys, on this Tuesday. I will be back on Friday with another video. I'm Caitlin McKegg with the Desert Dreamers team.